Hello and welcome to Ask You For a Trend. I'm Josh Lipton, and for the next half hour, we're breaking down the trends of today that'll move stocks tomorrow. There is a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. Markets closing lower yet again, with more tariff uncertainty shedding almost 500 more points off the Dow. We're going to dive into the rest of today's market trends. Then, speaking of tariff uncertainty, automakers are already trying to come back from high costs and inflation of the past 4 years. Could more uncertainty force car makers to look at layoffs? We're going to discuss that. Plus, President Trump addressing some of the country's most influential CEOs. That's tonight. What is he going to say? And will any of the CEOs tell him how they really feel about this recent sell-off? Well, U.S. stocks closing off session lows in a volatile trading session. Yahoo Finance's Jared Blickery joins us now with the trading day takeaways. Jared.
Thank you, Josh. First takeaway is defense. That is what we are playing right now. That is the theme that has emerged for the year and for the month. And let me just run through some stats here. I'm going to go to our sector heat map first. And this is today. So obviously a pretty red picture. It gets worse if you look at the 2-day there. And I believe we're about 11 days into the month. So let's take a look at how March is shaping up. I checked yesterday. It was the worst March on record. So start to a March, ever for the NASDAQ 100. So the data goes back to 1986, never had a worse start to a March. And here we see tech taking it the worst. That is down an even 10%, consumer discretionary, and then XLC is communication services. Those are the three mega cap sectors. And you look what's not in dark red. So it's only light red. Healthcare, staples, and real estate, those are defensive sectors. So those are the ones that are doing the best here. And that is, as I'm saying, just playing defense.
So much red on the screen.
Yes.
There's got to be some opportunity, doesn't there?
Yeah, and we'll get into that. I'll just show you real quickly. I'm liking what I see in terms of healthcare a little bit, but also China. A lot of people still say China is uninvestable. There's a lot of event risk that you have there, but there are some bright spots. And also bonds. Bonds have done well too. So let's get to our second point here, and that is going to be regime change. Now, this is interesting. We know that Trump won. That market began in 2016, carried over 2017, and et cetera. If you take the inauguration day, not the election day, and you compare Trump 1 to Trump 2, you get this chart. And in case you can't see the green very well, this is what's happening right now. Even if you go back to the inauguration, which is what I like to do, you're going to see that everything was kind of humming along in sync until very recently. That's when we saw this incredible divergence. So this just means that we have a different playbook. We have a different playbook than the rest of the pandemic. We have a different playbook than Trump won, and that's what markets are trying to figure out right now. And that uncertainty, the lack of knowing that playbook, is what's playing out in the markets.
I'm a viewer. I'm watching this. How do I play this?
Yeah.
How do we do?
Well, let's do this. Let me show you. I'm going to go back to our heat maps and I'll show you what has been working and what hasn't been working, not for the month of March, but let's go back to the inauguration here, and we could even do year to date because it's going to look very similar. So KWEB, that's China. EEM is emerging markets. No secret that the rest of the world has been flying high, doing well. There are concerns that that's only a temporary thing because when the rest of the world has picked up, it's usually been very fleeting over the last 20, 25 years, basically this century. But what's doing well? SPLV is low volatility. That's an S&P 500 low volatility ETF. LQD, that is corporate bonds that are safe. IBB is biotech. So there's some, besides KWEB, that's China. Take that out. You got the rest of the world and you got the very safe things in the US doing well. Biotech is not necessarily safe, but it kind of turns, it relates to healthcare, and healthcare is a sector that I really like here. Let me just show you what's happened year to date, and we can see that is in the forefront. I'll just show you a quick chart of why I like healthcare. It's not all in this chart. Here's a 5-year. There's a lot of sideways action here, but what's good about healthcare is it hasn't gone down that much compared to everything else. And despite the fact that it's held up well, it's really not getting the flows. So I got to think if the ETF flows, if you get those money flows into this sector, that's when it really pops. But to be fair, that's a show me case.
All right, Jared Blickery, point number 3.
All right, let's get back to the main point here. And I've been tracking all kinds of things with currencies. but also metals. And this is interesting because not only is gold up today, not only is silver, but copper. And gold isn't quite at its record high just yet. It's still kind of bouncing around just shy of $3,000 an ounce. I'll show that real quickly because I have it right here. There we go, 29.23, and I'll show you the year to date. This is a pretty nice looking chart. This is another thing that has worked well this year. It wasn't on my list before, but this has been a good trade for this year. Copper is HG equals F. That's actually outperforming gold this year, and it's right up there with coffee. And let me show the candlesticks. We had a big green candlestick here, and this is the highest level basically since the start of the year. And when copper starts heating up, and arguably this is a tariff story, that kind of ties into what's going on with China. And it's tough to say because the tariffs is really a supply story, and usually copper's shooting up. In my lifetime has been a demand story, so we'll have to see how that plays out. But anytime Dr. Copper starts rising, definitely peaks and perks up and catches my interest.
Final quick check on Bitcoin before we go.
Yes, sir. Hasn't been pretty lately. We know my target is 72,000, down 12.4% for the year, but let's see if it can come down here. It wouldn't be that too far a distance, come down here, tag this, and then potentially lift off. And yeah, it's still a bullish picture in the long term.
All right, thank you, buddy. Thank you,
Got
Jared. Minutes ago, the White House announcing it would not be doubling tariffs on Canadian steel and aluminum to 50% after all. It's after President Trump threatened to do so earlier in the day, with the auto industry already trying to recover from higher costs and inflation of the last 4 years. Our next guest says all the tariff uncertainty could lead automakers to look at layoffs. Joining us now is Carl Brower, iSeeCars.com executive analyst. Carl, it is great to see you. I wanted to start, Carl, actually, on this Trump post on social media. Because he says today, Carl, he says, listen, Canada, if you don't knock it off with these other tariffs, I'm paraphrasing Carl, but basically he's saying, you don't knock it off with these other tariffs, I'm going to hit you. I'm going to increase, I'm going to expand these tariffs on cars coming into the U.S. And really, he says, Carl, in this post, he says, frankly, it'd be easy to make these cars in the USA anyway. And that got my attention, Carl. I was interested to get your take on that point. You know the industry backwards and forwards. Would it be easy to make these cars in the U.S.?
Ultimately, it would be certainly possible. I don't know if I have the word easy is right, but I think we could certainly make the cars here. The problem isn't making them here. The problem is the transition to making them here. It's going to take years. And that's really always the tough part, I feel like, between the auto industry and politicians. Politicians, especially some politicians, they want things to change this afternoon. And they don't understand that the car industry, it takes years to set up even supplier networks just to get all the parts and have all the suppliers in place to ship you the parts. That can take months or even a year or more. And when you have to start building new assembly plants and producing cars on a brand new plant in a new country, like shifting something from Mexico or Canada to the US, that's going to take years. It's going to take years. You got to get the permits to build the plant. You got to construct the plant. You got to set up the new supplier chain to go to that plant. It's a long process. And that's why a lot of these CEOs are frustrated at these manufacturers, at these automakers, because they look at these bouncing around of tariffs and they have no way to react to those in any kind of time frame that matches the time frame they're shifting.
It's interesting, Carl, because listen, I put myself in the position of a CEO and you're running this car company, this auto company. You want to stay, Carl, on President Trump's good side. I mean, you'd rather be on his good side than his bad side. I guess the question then becomes, like, how would you do that? If you're saying, well, listen, it would take years, and I'm guessing billions, to set up a new plant here, if that's not really a realistic option, what would their options be? I mean, how would you do that? Would you try to look around and say, okay, well, I do got this plant, it's running some excess capacity, maybe I'll move that to the U.S.? What levers could they pull, do you think, and stay in Trump's good graces?
Well, short term, they can do exactly what you were describing. They could look at a plant that's got some maybe extra capacity, or maybe it's producing a lower profit vehicle, and the high profit vehicle just lost a lot of its profit because of the tariff coming from somewhere else, and they can try to use that plant instead. Those are all the things the levers they can try to pull. But I also feel like there's almost the tale of two Trumps, right? There's the Trump who's going to make these bold statements and try to get a reaction from the other countries. And then I think there's the Trump that wants to actually understand business and knows that business is something that's serious and it takes a while to set up. If you're an automaker CEO and you can go talk to Trump, maybe you can, and behind closed doors say, look, if you want us to start building these cars here, this is the pathway to getting there, and this is the time frame, and we can start making the moves to that. But if you change everything next week, and we can't do this until 2 years from now, we're stuck in between. And I think Trump would understand that, and I think he does. And so that's why I always take kind of a grain of salt when he makes these bold statements, because I think he understands this better than he appears to. I hope.
There's also, Carl, I would imagine, if you're running one of these companies, before you would make such big changes, you also know things could really shift in just a few years. I mean, who knows what happens in 2028, right? So would that be another variable? Like, well, if I'm running this company, before I would make these changes, as you noted, which would take years and a whole lot of money, wouldn't that be another variable? I don't even know what's coming in 28. I might have a new administration that says, hold on, that's not even our priority.
It's an impossible situation when you think about it, Josh. I mean, there are so many variables. That's why when you start throwing additional variables that don't seem necessary, like these tariffs, and it just gets very frustrating for the automakers, because without any political turmoil, they still have turmoil that'll come flying at them from just the regular market. I mean, you look at the 2000s, and SUVs were dominating the market. They were everywhere. And all of a sudden you had a recession, you had gas prices shoot up. I think it was Katrina that hit the Gulf. And all of a sudden, they couldn't unload these big SUVs. And their finance departments had put these SUVs on lease terms, and the price they were supposed to come back with 3 years later was much lower than they had put into the calculations. And they were underwater on all these SUVs. That's why 2 of the 3 automakers needed government bailouts just to keep from going under. So we don't need any more variables to make it more turbulent in the auto industry. There's plenty without the politicians or the president throwing tariffs around.
Carl, fast-moving, complex subject. Thanks for helping us walk through it. Appreciate it.
Thank you.
Stick around. Much more Ask for a Trend still to come. Well, President Trump meeting with American CEOs today as part of a business roundtable. Our next guest says the CEOs he's meeting with are deeply concerned about the impact of tariffs and now a potential recession. Joining me now is Bill George, former chairman and CEO of Medtronic, an executive fellow at Harvard Business School. Bill, it's great to see you. So in a former life, Bill, as we just referenced there, you were a CEO, you were running a big, important company. So I'm curious, Bill, what you are telling CEOs and CFOs. You're talking to them, and if they're asking you for advice, how, Bill, do I navigate this new world? How do I navigate Trump 2.0? What are you telling them?
Well, there is a fear that struck through the CEOs that I've seen, witnessed in person in December with 200 of them. I saw it recently this week in programs we had at Harvard. There is genuine fear about the negative impact, particularly of the tariffs, but a lot of things going on and potential for retribution. So I think many of them, I'm just advising to them 2 things. Number one, stay true to your purpose and your values. If you're not on mission, and stand behind that, and if you stand for something in your values, stand up and be counted. Not all of them agree with that. And the second thing is stay below the radar screen. No sense putting your head above the radar where you're going to get hit with crossfire and bullets. So stay below the radar screen and try not to get in the way, and just put your head down and do your business with your customers. But keep your people grounded in their mission and values, because in the end of the day, that's what matters. Your company's been around 50, 100, one case 300 years. That's what people know, and they're going to rely on that. That's what keeps them focused on things like producing great products and quality and great services.
Do you think, Bill, to the extent possible, you also want to try to stay on President Trump's good side? I mean, you'd rather be there, right, than his bad side? And I'm wondering if there is, as a former CEO yourself, is there a potential playbook there? Like, for example, Bill, I think of Apple CEO Tim Cook and how during Trump 1.0, I think Cook really proved not only was he a talented executive, he was a very skilled diplomat. I mean, he ultimately secured tariff exemptions, right? And now Apple, of course, you saw that, Bill. They put out a big headline. Hey, we're going to spend and invest $500 billion in the U.S. over the next 4 years. President Trump liked that headline a lot. I'm wondering is that the playbook, Bill? Should there be a playbook?
Well, he's very astute in politics, Tim is, and he's done a marvelous job with Apple. I think he's a fantastic CEO. But this plan that the so-called $500 billion, whether they'll actually spend that much remains to be seen. But that plan was been in gestation for 4 years. This is not a new plan. He's been working on this. and it's tied in with the CHIPS Act. They worked with the Biden administration. So this is not new. He was astute enough to give President Trump credit for the win, so that President Trump can announce it with him. But I'd also point out the next day that the president attacked him on diversity. And Tim, as you know, is gay. And so he went right down his throat on getting rid of diversity. And Tim has a very diverse organization, a very inclusive organization, and they work well together. So if I were advising Tim today, I'd say stay the course, Tim, on what you believe. Yeah, go ahead and invest heavily in the United States. Great, because it makes sense. They were way too heavily oriented towards China, and they had too much commitment there. They need a balanced supply chain. So this made good business sense, and he was astute enough to get President Trump the win. But I don't think he compromised one bit.
Bill, I want to ask you about Elon Musk as well, because he was on Fox Business, and he was asked, Bill, you saw this, how he's running as many businesses, given all these roles and responsibilities, and he says, with great difficulty, he says. I'm just curious, what do you make of that, and what should you make of that if you're a Tesla investor?
Well, first of all, no one's running Tesla today. Elon's spending all of his time with the president, you see in that photo, and working at Mar-a-Lago and taking on Doge. And that's where he's putting 100%. He's great. He's a brilliant inventor. I wish he'd get back to inventing things. So Tesla's product line is aging. They brought out this Cybertruck, which has been kind of a dud. I think it's hit 20% of its sales projection. And they really need to get back to inventing things. And he's got them off working on a lot of AI, which is very important, and other things. But you can't run 5 companies at once, and you certainly can't do that spending 100% of your time working in the government. So, and if he were wise, if he's going to do that, which Techie has done before, put somebody in charge. There's no one really in charge. He has 2 subordinates. Remember, he turned over the entire organization 18 months ago. So there's no one left at the top from that period. And he's got 2 executives, his CFO and his personal partner running the thing. But they aren't really the creators. So I'd love to see Elon get back to that, and SpaceX and some of these other brilliant ideas he has. He is a great entrepreneur, but I think he maybe is not as effective in the political sphere, wielding his chainsaw, which I think is going to reverberate negatively, not just for him, but on Tesla. There's a whole reaction to that. There's been there's brand erosion for Tesla right now from the people who are putting in cars. And as you know, the government is not pro on climate change and EVs like the previous government was. So this is a real problem.
Bill, always great to see you. Always great to have you on the show. Thanks for joining us.
Thank you.
Coming up, Netflix bounced back today, but shares of the streaming giant have been struggling as of late. We're going to take a deeper look at the moves when asking for a trend returns. Netflix shares feeling the pressure in recent weeks, falling over 11% in 1 month. For more on the challenges ahead for the streaming giant, we're bringing in Yahoo Finance's senior reporter, Alexander Canal. Allie.
Yeah, so you mentioned that 1 month decline. We're also about 20% off of the 52-week highs that we hit just 1 month ago, and there's not really a clear catalyst as to why. We've heard from some Wall Street analysts that maybe we're going to see some subscriber and engagement headwinds post-password sharing crackdown. We've also heard from management last week that they're not going to be spending that aggressively when it comes to sports rights. They're instead more focused on those live events like WWE, which we'll talk about in a second. But maybe that led to some selling pressure because maybe the growth story is a little muddied, but honestly, I don't think a lot of that was the catalyst of why we saw a nearly 9% single-day stock decline late last week. And that could perhaps signal something a little more sinister under the surface when we think about the overall stock market and what we've been seeing in tech. So Mizzou analyst Jordan Klein, he wrote in a note to clients on Friday that Netflix is a company that still has 0 tariff risks, has the pricing power, and almost feels recession-proof. Therefore, a significant one-day drop in the stock tells you that folks just want to reduce all exposure to equities right now. And it's interesting because outside of the Mag 7, Netflix has been one of the tech giants that have really outperformed. But it's not just Netflix that we've been seeing these significant declines. We also have AMD and Micron down over the past month. Shares of Palantir, that was a big momentum play. That's down about 30%. And then Dell also has tumbled about 20% over that same time period. So it sort of speaks to this this narrative that we're seeing across the broader markets, across tech, and how it's not just affecting these big Mag 7 players.
Let's talk wrestling.
Yeah.
WWE Raw comes to Madison Square Garden,
Yes.
right, on Monday night. It streams on Netflix. You were there.
I was
taking
there.
it all in. How important is this franchise to Netflix?
Oh my gosh, that was my biggest takeaway. Netflix was all over this event. Every single celebrity that you saw had some sort of ties to Netflix. We saw comedian Andrew Schultz, who has a comedy special coming out. He actually had a whole bit there in the ring. Logan Paul pulled him in. They fought a little bit. And you could tell the crowd was into it. Every single seat was taken. It was a sold out crowd. I was telling you in the break that one of the chants was, "This is awesome." People just loved it. A lot of children, I noticed. And that's something that Netflix told me that they've seen is a lot of folks who grew up watching WWE are now taking their kids.
They bring the whole family.
Yeah, it's this full circle moment. And you could just tell how much fun everyone was having. The fandom is real. It's alive and well. I know our line producer is a big fan as well. And it just really reinforced that Netflix is all in on this type of programming. And I think they're just going to continue to double down.
Big live events. I mean, right? Last year, you had Jake Paul, Mike Tyson, you had NFL, now some WWE Raw.
Right?
Yeah.
Like they had a little bit of issues in the beginning, but now they really seem to know what they're doing, and they're just making it bigger and better.
Allie, thank you. Appreciate
Thanks.
it. That is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market-moving stories affecting your wallet. Have a great night.